Investors and traders, welcome to the channel. Today is 11th of August 2024. Hope everyone is having a great day. This video will be taking a look at the key US markets. As always, this video is for educational purposes only and it's not a financial advice. So in the US stock markets and also bond markets, we have seen a fair amount of volatility come in over the past week. So the question is really, where do we go from here? What is next in terms of the patterns that we see and what the price is likely to do next? So this is what we're going to take a look at. So we'll start by taking a look at our timing model. So this is the chart for the timing model. Please take a note of the key dates. 5th of August, we had this key date come in. If you remember, we were looking at the September contract for NASDAQ futures, and 5th of August was one of the key dates coming up. So we had that basically put in we saw markets put in a low there, which the market is trying to retest. But it appears to be a fairly important low as of now. And then 8th of August, the key dates, the next key dates in the month of August are 20 to 21st of August. And then the big one we have is 29th of August to 3rd of September. And then another one is the 10th of September. Okay, so we'll start by taking a look at the US dollar. This is the weekly chart for the US dollar. And here what we are looking at is basically a market which is sideways, but a pretty big range. So it's been roughly around in 2024 between 100 and 107. 107 we believe is a pretty important top for the US dollar, and we have just seen the market basically trade in this big trading range. Now if we move to the daily chart, what we see is this pattern completed around the where you see this shaded area, a gray shaded area in that box. The market actually went and tested these lows, took out these lows, and now in my opinion there's some short covering going on at the moment. The market is likely to go up a little bit, maybe test 103.55 as high as 103.85. But it's likely to encounter a fair amount of resistance. In fact, 103.25 is a resistance level because this is the market symmetry, but the market could go a little bit higher and test 103.50 as well. Then the further target for us will be around 101.50, and below that 150, which is the lows around here. It's only if the market is able to break below the 99 level on a consistent basis, daily, couple of daily closes below, that we could expect the market to then move much lower. Our longer term view is that the US dollar might have actually topped. This is something which we discussed in last weekend's video, so I will highly encourage you to watch that because of the key patterns and the market symmetry that we are watching in the US dollar on longer term monthly charts. Let's take a quick look at the Bitcoin. So the Bitcoin has also been in a fairly tight, well, not a tight trading range, but a fairly large trading range, about 20,000. And then the other important thing about the Bitcoin is that the volatility in the Bitcoin was also a lot. So since 11th of July, we have seen this market pull back quite a bit. But what is really important is that it is actually completing these couple of these ABCD patterns. So there is fair amount of support around 51,500 level. If the market is actually going to break below this, then that will open up much lower targets for the Bitcoin. So the Bitcoin is kind of related to in terms of what is happening with the stock indices, in particular NASDAQ. Sometimes Bitcoin is leading, sometimes NASDAQ is leading, so there is some correlation. Sometimes the correlation is really superb. But what we are really watching from a technical perspective in the Bitcoin is actually 51,500 level. This is the chart of the Lucas time spiral. It is the hidden secret cycle in the Bitcoin. It has a really good track record of key turning points in this market. So the last key turn came in on the 13th of March. So this is the monthly chart on the log scale. and we have seen the market just trade down and sideways to down. Now the month of September is a really key month coming up for the Bitcoin, because if we add 7, which is a Lucas number, to the highs of March, we get September. And if September is not going to be meaningful for Bitcoin in terms of making new all-time highs, then if we add another 7 to it, then we go to March 2025, which will be another key month for the Bitcoin market. So if you are interested in knowing how this chart is actually constructed, and then in the archives, please search for the Lucas time spiral video I did a few months ago, and in that I actually go in detail what these numbers are and how they relate to each other and what is the significance of this. So I think you'll really enjoy it and find it a great educational resource. Then we take a look at the VIX index. So here we go. This is the weekly chart of VIX. Look at this spike that took place in particular on Monday, 5th of August. So going back several years, this is the third largest spike that we have seen in the VIX. So we have gone through some extraordinary times, especially during the great financial crisis. So the October 2008, it just spiked, a little above 95. Then during the pandemic in March of 2020, it spiked to about 85, and this is the third largest we saw, where it spiked to 65. Now, at the end of the week, it's really interesting is that it actually closed at 20.36. So a lot of volatility, which was expected to come in, it actually dissipated by the end of the week. So that's a positive for the stock indices. And now the stock indices are likely to, or the markets are likely to remain pretty volatile till a sort of confirmed base is formed. We'll talk more about it later on in the presentation. But keep in mind that actually VIX closed much lower on last Friday, where it had actually gone up to during Monday, 5th of August. So that's an important point to make a note of. Then if we look at the Treasury Markets, will be mainly taking a look at the US bond markets. We'll cover the 2-year Treasury note, will cover the 10-year and the long bond futures. So Treasury markets, the debt markets are much bigger than the equity markets. Interest rate markets are obviously very sensitive to interest rate movement, and a lot of times they're actually able to foretell what is likely to happen with the interest rates. So here we go. This is the chart which comes from Bill Meridian of cyclesresearch.com, and what we see here is basically the monthly return of US 10-year Treasury notes. Look, what is really important to note is in terms of the seasonality which exists. Look at the months of July and August. In fact, from the months of June, so that's later end of the month of June, the treasuries, they begin to actually perform much better. And July, it's the expected returns are positive, and the biggest returns have been seen in the month of August. So what it means is that treasuries are actually likely to move higher. Here we go. This is the 10-year Treasury note weekly chart, and here really interesting that we were watching for this ABCD pattern, which in fact was completed last week. And no surprise that actually market after reaching that target and completing this pattern actually sold off quite a bit for such a big market. But again, what we're expecting is higher prices to come in, and one of the reasons is that if we look at on the 10-year Treasury daily charts, look at this big ABCD completed with the 1.272 expansion of the BC swing. It has retraced a fair amount. There is a possibility it could retrace a little bit lower to perhaps 112 region, and it's likely to find pretty good support around there. The 20-day moving average is nearby, and also we have the 61.8% retracement of this swing. We also have the 38.2% of this swing from CD leg. So really key important levels just below that. So the chances are actually that this market is poised to go higher. And another reason is the actually long bond futures. So this is the daily chart of long bond futures, and what we see is this ABCD, and here actually this market has not completed the CD leg, so the target is about 132, but it certainly does appear to be in this CD leg, although it found resistance from this point B, but it completed its 38.2% retracement of this move from this point C to the highs which were reached a few days ago. So that's a really important price level, 121 and 18 seconds. And so this market, we are also looking for higher prices to come at us in the long bond futures. And if we look at on the shorter end of the curve, this is the 2-year T-bill. And here we had this pattern which completed. We had a target of 3.9% for the T-bill to 2-year T-bill to reach, and in fact it did that and even exceeded that, but it found support from here. From this structural low. So we actually had identified this as a head and shoulder pattern, and then there was a minor head and shoulder pattern within this CD leg as well. Once the market began to break below the 4.6% level, which was 4.7%, which is 38.2% retracement, it just cascaded below really quickly and completed our target. So now it's not a surprise that the yields have moved up a little bit. The chances are it could actually go and hit 4.2 to 4.25 percent level right in this gray box. So this is what we are looking at in the shorter term for the shorter end of the curve, 2-year T-bill. But it looks like this market, it just go range bound for the yields, and eventually may even try to target 3.6%. That remains a possibility as well. So now if we move on to the gold market, this is the chart, the daily chart of the COMEX gold. It is the futures market, it's not the spot gold. So if you're watching the spot market, then your price levels are going to be slightly different, so just want to make you aware of that. So the gold is really interesting because there have been it has been creeping higher, but if you look at this, just doesn't really have that strong conviction of the trend the way it did trend back in February. And here is formed this wedge pattern. You can see these gray lines here, and then of course these channel formation in the blue, and it's also completed in the ABCD near 2500. Now 2500 was our shoulder, was our one of the targets. We do have a higher target as well, but it actually achieved this one, and after that there is a chance the market could actually pull back. So that possibility remains there. There is a possibility and might actually try to tackle the 2550 level, which will be the top of this channel, also the 1.618 expansion of this range, and it will also form a 3 drives to a top pattern as well. That possibility is there, but it looks like the kind of up move we were expecting, that might come later on, and we might see a pullback happen in the gold price first. The reason is that gold has actually moved up a fair amount. So if we take a look on the longer term monthly chart, we have this ABCD completing around the 2700 mark, and here what we are looking at is in this CD leg here, which is the one we believe the market is in at the moment. The BC swing was of this much magnitude. So if there is going to be a pullback coming in, which is not really confirmed yet, but the chances are because of the technical formation of the wedges, then the market would actually pull back fair amount, maybe to about 2100 to 2000 would possibly be a target where we'll have a lot of structural support come in. So we're just watching the gold market, what is likely to happen next based on the price action, but we do have this kind of wedge formation taking place, and a possible 3 rise to a top or the market, because of, you can see one touch, two touch, three touch here, and then the market has pulled back. There's a chance it could actually pull back further. But if it is if it is able to break below this 89 period moving average and this gray line, which is the the wedge lower boundary, then we can see the rotation lower. So we'll be watching the price action really carefully in the gold market. Silver is slightly different. In fact, it looks weaker. We had much better expectations for the silver market, because we were expecting it to hit about $35 per ounce level, but that hasn't happened yet. In fact, what it has done is it has completed this ABCD, but an extended one to 1.272 of the AB leg, but this point C is still intact. This means that this might actually be a pretty big range, and the market, if it is likely to, if it's not able to break below this 2620 level, then it is likely to go and at least test the upper end of the trading range, and possibly break out of it and test the upper levels. Longer term trend line still intact. A really key level around the 2650 for the silver market. And now let's take a look at the stock market, and this is how the stock market in the US performed last week. And last week was, as you know, a very volatile week in the markets. So the S&P 500 actually closed. This is on the futures by 7 points, or 0.13%, and the NASDAQ 100 closed above 89 and a quarter points, or 0.5%. Dow Jones did not perform that well, so it closed in the negative territory, 146 points minus, which is about minus 0.37. But the worst performer was the small caps. Russell 2000 down 24 points, or 1.14%. So I think the market did respond to certain kind of news, and of course the unwind of the carry trade that we have been speaking about for quite some time. So not going to go into the details of that. You can watch last week's and the previous week's video. Interesting kind of formation what took place towards the end of the week, because some data came out with regards to jobs. The market seemed to like that, and we had a nice move last Friday, Thursday, Friday. So this is the Semiconductors Index, and this is a index which is composed of the stocks which are related to the semiconductor manufacturing. It's really interesting to see that it's been pretty strong, but it has actually also formed this wedge formation, the one which is shown in this red lines here, and it broke below it, and after that just cascaded lower, and right now it's at a pretty good support level, which it reached on the 5th of August, which was testing the lows of April, last April, and really close to 61.8% retracement. And now this move, what we are looking here, it more looks like a bull flag to me. So there is certainly much more improvement that needs to take place, but the key thing is that it actually broke this trend line, and this wedge formation just broke out of it. And one thing about wedges is that when the markets break out of them to the upside or to the downside, it's a pretty dramatic move, and this is what we have seen. And it's just gone down really quickly. So just be aware of that. And on the flip side of this, if we were to take a ratio, and semiconductors, which are artificial intelligence related stocks, all being the semiconductors, the new technology which is able to power the artificial intelligence, they had been in fashion for a long time. A lot of money got poured into stocks like Nvidia, for example, AMD historically. And there have been sectors which have not been performing that well, and one of them is actually the gold miners. So if we just take a ratio of the semiconductors index to the gold bugs index, we see a really interesting picture. This is the monthly chart of the ratio. So what we see is in August of 2000, when it had reached a peak around this. The from a fundamental level, something really interesting was happening as well. So the Fed fund rates were higher than 5%, and the internet and .com, we were in a internet .com era. And fast forward 24 years, the Fed fund rates are again higher than 5%, and we are in the blockchain and artificial intelligence era. So really interesting to see that something began to happen here. It was more of a rotation, where the money started to move out of these semiconductor related stocks, and it started to go into really underperforming areas, companies, gold miners, some of them profitable companies, but the stock price not moving that much. So it's likely it's one of the, I've just taken one of the examples, but there could be other ones as well where we could see this kind of ratio relationship exists. So what I'm pointing out to you is there is a likelihood of a ongoing rotation taking place, where money which got really concentrated towards a certain sector might actually be moving out, coming out and moving into some other sectors as well. So rotational aspect. So really interesting chart to watch. Okay, so I have this chart again. So this is the GDX, which is the gold miners ETF. Here we have an interesting formation. We had this triangular wedge formation shown in gray. So the market actually broke out of it. Now it's testing. It's just retraced a little bit, but the chances are we are in this black ABCD higher, which could in fact see the gold miners actually move a little bit higher to about $50 per share level. Now this is really important that the market actually doesn't break below this trend line here. Otherwise we will be looking at a different pattern formation. But till that happen, and this point C around the $20, roughly around $22 mark, remains is held, then we think that we are in this ABCD moving to $50 per share level for the gold miners stocks. This is the energy ETF. This is a really interesting one. It had completed this big ABCD shown in the purple at around $97.70 region, and then after that the market has actually moved a fair amount. It has retraced the 61.8% retracement of the CD leg. And here, when we had done the analysis on this previous time, we had actually made a note that breaking below the 91.30 will be bearish, and this is exactly what happened. Once it broke below the 91.30 level, it actually went as low as 85. But now something really interesting is also happening, and also because it hit a key retracement level, which is 61.8% retracement of this entire CD leg. There's a possibility we might be actually looking at a pretty good support level, and the reason is we have these ABCDs one-to-one price projections completing. We have this red one which completed around here, and the black one a little bit lower, and we have a confluence of the 61.8% retracement and this price projection. So we'll be really watching this area, and if the market breaks below that, then it's likely to go much lower. But if it is able to find some good support around here, and which we need some further evidence of, then it will be another indication that perhaps some money is also moving into the energy related stocks. So we'll be actually watching these for further price action confirmation. Now let's take a look at the NASDAQ futures. This is the chart of weekly chart of the NASDAQ futures. A really interesting thing about this one is that it completed this big ABCD pattern shown in the green line. We have had a look at this one many times, but for new subscribers and new people who are new to the channel watching for the first time, 20,750 was our target for many months. We had projected this level or forecasted this level. The market actually reached that, breached it by a little bit, was not able to close above it, and since that we have seen the market pull back about 17%. So it is such a big pattern completed, and it was really textbook pattern. It's very rare to get a pattern as clean like this one, that what we see right here in front of us. So this is pretty amazing. And also it broke when the market actually on the daily charts broke below a key level, and which actually tells us now that we are most likely in a correction, at least in NASDAQ, or a pullback of a higher degree. So it could actually take some time for the market to remain in this kind of corrective mode. So now the other interesting thing is that if we just draw this trend line here, the one which we see in brown, then this is where the market seems to have found some support, and on in futures at least closed positive for the week. So that is something which the bulls want to see, that the market actually close positive. Now if we take a look at on the daily charts, something really interesting on the daily charts as well. We had a timing come in 5th of August. We had a look at the the September contract for NASDAQ. I had shown that in some previous videos. 5th of August was the timing we were watching for, and on 5th of August the market actually also formed or completed this ABCD pattern, which you see in blue. And here we have the time and the price coming together, and when the price meets time, the pattern is complete. So it is a completed pattern from a technical perspective. Now the sell-off had been so strong or severe that we are really careful in watching whether it is something that this point D is likely to hold or not. And thus far we have seen in the market actually hold this for now, but again it is finding or is moving in a region where there is resistance above. So looking at this 38.2% retracement around 18,740, which was also our level, that if the market was going to breach that to the downside, was going to indicate to us that this actually move is of a higher degree and it could take longer to play out. So we are careful with this. We are looking for more evidence that okay, perhaps we might have had a good bottom come in, or it is a low but not the low. So we are waiting for what the price action might look like if the market is able to move into this region. Now if we look at this ABCD, if the market is actually able to get above the 50% level at least, what it means is that it is actually encroaching into this AB swing. So this also means that there is fair amount of strength that the market that has come into the market, that is actually able to take out so much resistance out, especially coming from 38.2% and even 50%, and encroach into this AB category segment. So which means that that this will begin to give us some indication that okay, we might have seen a lot of selling pressure, perhaps the worst of the selling pressure we might have seen. Now it doesn't mean that the market begins to go and make new highs, because of the pattern that we see on the weekly chart. The more chances that the market actually remains range bound for quite some time. And also keep the timings which we had a look at. It looks like the month of September could actually bring a lot of volatility again, and so we might actually begin to move in a trading range. It could be fairly large trading range for the 2 weeks of August, and then when we begin to move into September, that could actually perhaps bring more volatility. But the key will remain that whether this 5th of August low is broken. If it is broken to the downside, then it opens up a really big pattern formation that will be big A, B, C, from wherever the C point will be A, B, C, and it could take it down much lower, and it could happen in a much faster way as well. So really watching the price action for further confirmation, resistance around here. Really watching these rallies with skepticism right now, to get further information and confirmation that the 5th of August low might have been a pretty good low, which could actually hold. But right now we do have this ABCD pattern, and this is what we actually watch for. Now this is the S&P 500 futures. Here on the weekly chart, slightly different pattern to the S&P to the NASDAQ 100, because the S&P 500 did not complete ABCD, but the NASDAQ did. But one thing is common between them, that in NASDAQ the BC swing was 1.618 expansion, and that was also coinciding with point D. But here we do not see that, so this is why we have seen a fair amount of pullback, a pretty big pullback in fact, coming into the S&P 500 market based on the futures chart that we're looking at from this 1.618 expansion of the BC swing. But the possibility still remains that this market perhaps could go and complete this ABCD around 61,000 points. So if we just look at the highs reached and the 61,000 as a probable target, there is not that much upside left. So this is why even the long-term investors, maybe they need to be a little bit careful and adjust their portfolios accordingly. And here, at least the market closed positive for the week, so that's actually a good thing for the bulls. And if we look at the S&P 500 futures on the daily chart, we also have this ABCD pattern, but here the CD leg got extended by 1.618 of the AB leg, and the market also came pretty close to the 38.2% retracement of the October 2023 lows, and the market of course corrected about 10%, which is a fair amount. So again, what we are watching for is right where it closed last Friday was this 38.2% retracement. And so where we see this box, that's in a resistance zone. So how the market is likely to deal with this resistance level is something that we will have to wait and watch and see the price action. But the chances are we might actually remain range bound, and it could be a pretty large range where the market might come back and try to test these lows. So it's not really 100%, although we have the timing coming, we have the pattern. So this is a completed pattern because of the timing and the price meeting the time, the pattern is complete, but still being extra cautious because of the severity of the move, to see whether how much of a chance this has for this market to hold this 5th of August low for a longer period of time. And just below that we have the 200-day moving average as well. So another thing I'll show you on the NASDAQ chart, which I forgot to point out, is the look at this red line is 200-day moving average. It has actually crept up. So this is really important. If the market breaks below the 200-day moving average, this is something which a lot of trend following systems take a look at. So closing below that on at least 2 to 3 consecutive daily basis is going to be fairly negative. So another support point around here, and it's really important that actually market is able to hold the 5th of August low. So I think the next trading week will be really critical for us to be able to analyze the further price action. And similar, the 200-day moving average is just below this 38.2% retracement. So the possibility remains that S&P 500 could actually, perhaps on an intraday basis, might try to reach that, and also creeping up slightly. So two things can happen. Either the price try to go and meet this 200-day moving average, or it just spends time in a trading range, which is something I'm expecting, and this average keeps on creeping up and up, and this is how the price might actually go and eventually meet this, and we reach a point where the market is fairly valued. So again, a really key and important week coming up for the market from a price action perspective. The 5th of August low is a important low. It has been held thus far. Whether it is the low that remains, we need to see further price action to be able to confirm that, but we do have these completed patterns, and not just only in S&P 500 and NASDAQ, but also in the Dow Jones Industrial, and even DAX and FTSE 100 also made lows in unison with all these markets at key levels. So that's another really interesting point to note. Again, I would like to thank all of you for watching the video. And if you found this of educational value, then please do subscribe to the channel, and if you like the video, then give it a thumbs up. Thank you very much. Good luck and good trading, and speak to you guys soon.